Over the past few years, Colorado's housing market has been one of the fastest growing in the country. Cities like Denver, Colorado Springs, and several Front Range suburbs saw historic price surges driven by low interest rates, limited inventory, and intense buyer competition. However, as we move into late 2025 and toward winter 2026, the market is clearly shifting. In this analysis, we're going to take a closer look at what is actually happening beneath the surface of Colorado real estate. Using recent data from sources like Zillow, Redfin, and Realtor.com, we'll break down which cities are showing signs of price declines, increased inventory, and longer selling times, and why those signals matter. The Denver metro housing market has been one of the most scrutinized in the United States through 2025 and into the forecast period for winter 2025, 26, and early 2026. After several years of rapid price growth during the pandemic, fueled by low mortgage rates and strong demand, recent trends indicate a cooling in prices and a shift toward a buyer's market rather than continued steep increases. The median home price in the metro area remains high relative to historical norms, with figures approaching around $575,000 to $600,000 in late 2025. But this represents a slowdown from earlier peaks and modest declines in certain segments, such as condos and townhomes. One of the key reasons prices are softening is the increase in housing inventory combined with persistent affordability challenges. Listings in the Denver metro have grown significantly compared with the previous year, giving buyers more options and reducing competitive pressure that had been typical in recent years. At the same time, higher mortgage rates have priced some buyers out of the market, contributing to slower sales activity and longer times on the market before contracts are signed. Forecasts for 2026 suggest that home prices in the Denver metro could continue to experience modest declines rather than dramatic freefall. For example, one forecast projects that overall home prices could fall by around 3.4% in 2026, with sales also declining, reflecting a more balanced but buyer-leaning market. Some analyses even note potential corrections of up to about 9% over a longer period if current trends persist, though this is not universally accepted. The combination of elevated inventory, high relative prices, and affordability challenges are the main drivers behind these price shifts. While the market is not in immediate crisis, these conditions could lead to further modest price declines into winter 2025 and early 2026. Especially in specific housing segments or neighborhoods where demand remains weaker. The Colorado Springs housing market has been shifting in 2025, moving away from the rapid price appreciation seen earlier in the decade toward a more balanced or softening market. Unlike a dramatic collapse, current data show that home prices in the region have leveled off or declined modestly as inventory rises and buyer leverage increases. According to recent reports, the median home price in Colorado Springs has softened to around $473,500, which is slightly below last year's levels and indicative of downward pressure in the market. One of the most visible signs of the market's transition is the growth in inventory and extended selling times. There are nearly 4,000 homes listed for sale, the highest number seen in a decade for this time of year, and homes are sitting on the market longer than in previous years. This shift suggests that buyers have more choices and greater negotiation power, which typically results in sellers making price concessions and slowing price growth. Price cuts are becoming more common as sellers adjust expectations in a market where demand has softened. Recent data indicate that median list prices have declined by roughly 3.6% year over year, and more than half of active listings have experienced price reductions as sellers compete for a more selective buyer pool. Several factors are contributing to this cooling trend. Elevated mortgage rates and stricter lending conditions are limiting buyer affordability, slowing transaction activity, and reducing upward pressure on prices. Additionally, the seasonal shift into fall and winter historically brings fewer buyers into the market, adding to slower sales and downward pricing pressure. Although Colorado Springs has not experienced a sharp freefall, prices are showing clear signs of softening, and forecasts based on current trends suggest that modest declines could continue into winter 2025-2026 unless there is a significant change in supply, demand, or mortgage rates. The Fort Collins housing market, part of the Northern Colorado Front Range, has shown a mixed price trend through 2025, with some indicators of price stagnation or modest decline, even though periodic short-term price gains appear in certain months. According to Zillow's Home Values Index, the average home value in Fort Collins has slipped by about 1.1% year-over-year, and typical home values are in the mid-$540,000 range as of late 2025. This indicates that prices are not rising strongly and may be slightly lower than a year earlier, reflecting cooler demand or adjustments after rapid past growth. Sales activity has been somewhat mixed, with reported increases in the number of homes sold in some months of 2025, but total homes sold year-over-year have declined, and homes are staying on the market longer compared with previous years. Additionally, inventory metrics show that homes for sale have been increasing, particularly through spring and summer of 2025, suggesting that sellers are offering more choice to buyers. Increased listings without proportionate demand tends to put downward pressure on prices. The market's seasonal patterns and broader economic factors such as higher mortgage rates and affordability constraints also contribute to slower pricing momentum. As borrowing costs remain elevated relative to historical norms, fewer buyers can comfortably enter the market, reducing upward pressure on prices and, in some cases, encouraging sellers to adjust or lower their list prices. National housing forecasts have pointed toward modest price declines in many U.S. markets because of similar conditions. Even though Fort Collins has not entered a severe freefall, modest price softening or flattening is evident, with modest annual declines or flat pricing rather than consistent appreciation. Given current trends, it is plausible that prices could remain stable or edge lower by another few percent into winter 2025-26 if inventory stays elevated and demand remains cautious. For investors and buyers, this environment might present opportunities to negotiate, while sellers may face more competition and pressure to price homes competitively. The Boulder housing market remains one of the priciest in Colorado, with home prices historically well above the state median, but recent data indicate a gentle cooling trend rather than steep increases. According to Zillow's Home Values Index, the typical home value in Boulder was around $923,959, which represents a year-over-year decline of approximately 2.5% as of late 2025. This suggests that prices are slightly lower than a year earlier, reflecting easing demand and more homes available for sale. Other market reports show similar dynamics. Median sales prices have hovered near $937,000, $989,000, depending on data sources, with some listing metrics showing slight year-over-year decreases in price per square foot and a higher proportion of homes selling below asking price. Homes in Boulder also tend to take longer to sell, with typical days on market increasing compared with previous periods, another sign that buyers have greater negotiating leverage than in recent years' rapid growth market. Several factors are contributing to this shift toward a more balanced or modestly softer market. Elevated mortgage rates and affordability challenges have reduced the pool of buyers who can comfortably afford Boulder's higher price tiers, encouraging some sellers to adjust their expectations and list prices. Increased inventory levels in Boulder County with more homes actively listed for sale have also given buyers more options and pushed some sellers to accept offers below original ask prices. While Boulder has not entered a dramatic price collapse, modest declines of roughly 2–5% year-over-year have been observed in some datasets, and inventory increases suggest that further slight downward pressure could continue through winter 2025 into early 2026, unless market conditions change significantly. Unlike markets in rapid freefall, Boulder's adjustments reflect a correction from historically high levels toward a more normalized state, with sellers and buyers negotiating in a less overheated environment. The Greeley housing market in late 2025 presents a mixed but slightly cooling price trend rather than dramatic increases or sharp declines. According to Zillow's Home Values Index, the typical home value in Greeley is around $415,000, and this reflects a year-over-year decrease of approximately 1.5%. indicating that home values have softened compared with 12 months earlier. Other Zillow data through September 2025 show typical home values near $420,000 with a roughly 1.1% annual decline, reinforcing the idea of modest downward pressure in broader Greeley market pricing. Redfin's housing metrics provide slightly different signals, reporting a median sale price near $425,000 and a year-over-year increase of about 3.7% in October 2025. Along with longer average days on the market, 57 versus 49, compared with the prior year. This divergence between data sources suggests that market dynamics vary by segment and neighborhood, with some homes still selling at modest price growth while overall median values soften slightly. Monthly local market reports also document price swings month to month throughout 2025. For example, in March 2025, the median sale price was reported down about 6.2% compared with the prior month before later months showed modest gains. Meanwhile, inventory has increased somewhat, and the month's supply of inventory has fluctuated, which tends to give buyers more options and can temper pricing. Several factors are influencing these mixed trends. Seasonal housing market cycles typically slow in fall and winter, reducing buyer activity and placing gentle downward pressure on prices. Persistently higher mortgage rates and affordability constraints also limit buyer demand in many segments, encouraging sellers to reconsider list prices or accept offers closer to or below asking prices. The combination of slightly rising inventory and cautious buyer demand may keep Greeley prices flat or modestly softer into winter 2025-26, though significant freefall declines are not evident in current data. The Aurora, Colorado housing market, part of the broader Denver metro region, has been showing modest price softening year over year rather than steep growth through late 2025. According to recent Zillow data, the typical home value in Aurora is about $455,348, and this represents a year-over-year decrease of approximately 4.5%, indicating that overall prices are lower than they were a year earlier. Redfin data similarly show a median sale price near $455,000 in October 2025, down roughly 4.2% compared with the prior year, and homes taking slightly longer to sell, about 47 days on market compared with 41 days previously. These trends point to a market that is cooling relative to the rapid growth of prior years and moving toward a more balanced supply-demand dynamic. Several factors are contributing to this softening trend. Higher mortgage rates, hovering in the mid-6% range, have tempered buyer enthusiasm by increasing borrowing costs, reducing affordability, and slowing the pace of purchase activity. While Aurora still draws buyers due to its relative affordability compared with Denver proper and strong local employment growth, more inventory measured by higher active listings gives buyers more options and reduces upward pricing pressure. Longer times on market and lower median sale prices further suggest that sellers may need to be flexible on price to achieve deals. Although the market has not experienced a dramatic collapse, the current data show modest price declines of around 4% year over year, and if current trends continue into winter 2025-26, further slight price softening is plausible, especially in segments with more inventory or slower buyer demand. This environment could present opportunities for buyers to negotiate, while sellers may face pressure to moderate pricing expectations compared with the overheated conditions seen earlier in the decade. If mortgage rates decrease or buyer demand increases, as forecasts suggest for some markets in 2026, price declines could stabilize rather than deepen. The El Paso County housing market, which includes Colorado Springs and surrounding communities, has shown modest price softening rather than dramatic growth through late 2025. According to Zillow data, the average home value in the county is about $446,355, and this reflects a year-over-year decrease of roughly 2.2%, indicating that typical home values have softened compared with 12 months earlier. Zillow metrics also show that homes are taking about 46 days to go pending, and slightly more than half of sales are occurring below list price, suggesting increased negotiation leverage for buyers in some segments. Other data sources provide a similar picture of flattening or slightly lower home prices. Property Focus reports median home prices near $460,000 to $463,000 in 2025, and although total sales volume remains active, they reflect a market that lacks the rapid appreciation seen in prior years. Realtor.com notes that median listing prices in El Paso County were approximately flat year-over-year, around $485,000 in late 2025, further demonstrating that price growth has largely stalled and may even retreat modestly. Several factors are contributing to this cooler price trend. Elevated mortgage rates, still higher than historical norms, continue to constrain buyer affordability, reducing demand at earlier price levels. Inventory levels have also risen compared with recent years, giving buyers more choice and reducing the urgency that previously supported rapid price increases. Additionally, local affordability challenges, where a relatively small share of households can comfortably afford homes above $600,000, put downward pressure on higher-priced segments of the market. Market participants, including local realtors, have observed an increase in price reductions and longer selling times across El Paso County listings as sellers adjust expectations to match slower buyer activity. While the market is not in free fall, modest price declines of a few percent year-over-year are observable, and further slight softening into winter 2025-26 is plausible if inventory remains elevated and buyer demand continues to be restrained by higher financing costs. This suggests that prices could plateau or edge downward further rather than continue rising sharply in the near term. The Thornton housing market has shifted from the rapid price increases seen earlier in the decade to a more stabilized and slightly softer market in 2025. According to Zillow's Home Values Index, the typical home value in Thornton is roughly $491,858, and this reflects a year-over-year decline of about 2.8%, indicating that home values are somewhat lower than they were a year ago rather than continuing strong appreciation. Homes in Thornton currently go under contract in about 31 days, and there is an increasing share of sales occurring under list price as buyer leverage grows. Redfin data similarly show that median sale prices dipped by around 2.1% year-over-year, with homes taking around 50 days on market compared with shorter selling times previously. This combination of slower sales and modest price declines suggests a market that has cooled relative to the overheated conditions of the past several years. While early 2025 data did show occasional modest price gains in some segments, for example, an earlier report indicated slight year-over-year increases in median sold price trends have subsequently softened, and price growth is no longer robust. Several factors are contributing to this more balanced or slightly softer pricing environment. Elevated mortgage rates continue to limit affordability for many buyers, reducing competitive pressure and encouraging sellers to price more realistically. Local realtors report that homes are lingering longer on the market, giving buyers greater negotiating power compared with prior years of bidding wars and quick sales. Inventory has increased, which also tempers upward price pressure and provides buyers with more choices. Looking toward winter 2025-26 and early 2026, current data and forecasts indicate that prices in Thornton could remain flat or edge modestly downward, perhaps another 1–3% decline, as the market continues to adjust and buyer demand remains cautious. Some property segments or neighborhoods may show variation, with stronger stability in higher demand pockets and softer conditions in others. This dynamic reflects a moderating suburban market rather than dramatic collapse, with price adjustments unfolding as buyers and sellers recalibrate expectations. The Pueblo housing market has shown a slight cooling trend in 2025, with home prices softening modestly rather than sharply rising or collapsing. According to Redfin data, the median sale price in Pueblo was about $250,000 in October 2025, which represents approximately a 3.8% decline compared with a year earlier. Homes in Pueblo also took longer to sell, about 74 days on market versus 55 days the previous year, indicating slower sales activity and greater buyer leverage. Zillow's Home Value Index offers a somewhat similar picture, showing typical home values around $280,965, with a modest annual decrease near 1.4%. and around 64 days to pending status. These combined data suggest that prices have softened but not collapsed, with some segments showing more substantial shifts than others. Realtor.com data also point to median listing prices that were down year over year, around negative 9.4% in some measures, and sales occurring slightly below list price, reflecting a cooler market where buyers have more negotiation leverage. Multiple local market reports describe a shift toward a more balanced or buyer-friendly environment, with increased inventory and homes staying on the market longer than in the pandemic boom era. Buyers are no longer facing the intense competition of prior years. Sellers who price competitively still find offers, but overpriced listings linger. Several factors contribute to these trends. Elevated mortgage rates and affordability constraints continue to limit demand in lower-priced markets like Pueblo, slowing transaction activity and reducing upward pricing pressure. Seasonal cooling typically reduces buyer interest toward winter, which can further soften prices if inventory remains elevated. Looking ahead into winter 2025-26 and early 2026, Pueblo's real estate market is likely to remain relatively stable or edge slightly downward, with year-over-year price changes in the low single digits rather than deep declines. Current indicators show flat to modestly negative price movement, increased days on market, and balanced inventory conditions consistent with a cooling rather than collapsing housing market. The Steamboat Springs housing market, a well-known mountain resort community, has shifted noticeably in 2025 from the frenetic sellers market seen during the pandemic years toward a more balanced or slightly buyer-friendly environment. Inventory has risen sharply compared with the previous year, with active listings climbing by more than 70% year over year, and homes are taking longer to sell, with days on market increasing to around 34-61 days depending on the neighborhood and season. Higher inventory and longer selling times are classic indicators of a market cooling and giving buyers more negotiation leverage. In Steamboat, pricing has remained relatively strong overall, with median price per square foot showing modest increases in some months. But this masks underlying softness in certain segments and increased price adjustments. About 25 listings reduced their prices in late 2025, with average reductions approaching 9% in some cases, which suggests that sellers who overprice are having to retreat to attract buyers. These shifts reflect a more balanced market rather than a persistently overheated one. One of the primary reasons for the softer dynamics is that inventory levels are significantly higher than in recent years, giving buyers more choices than they have had since before the pandemic, and reducing urgency that previously drove rapid bidding wars. Additionally, higher mortgage rates, which have remained elevated relative to historical lows, constrain entry-level and moderate buyers more than high-net-worth cash buyers, tempering overall demand. Although Steamboat's market still sees strong demand in desirable price points and continued interest from remote workers and lifestyle buyers who prioritize mountain living, the influx of listings and longer marketing times mean that price growth has moderated substantially. Some segments may still show year-over-year gains, but the overall trend depicts stability or slight year-over-year decline in effective prices, especially once price reductions are factored in. A few percent down year-over-year or flat pricing into winter 2025-26 is plausible if current inventory and demand trends persist. This contrasts with dramatic freefall scenarios. Instead, the Steamboat market is transitioning toward balance, with buyers gaining leverage and sellers adjusting pricing more frequently. Given the seasonal slowdown typical of mountain real estate as winter begins and variable affordability pressures, modest price softening rather than severe drops is the prevailing pattern heading into early 2026.